Test. 1, 2. Did it work? It worked. Yes. Got a voicemail. Boom. Superman. What's up, guys? How's it going? Check out this new shirt. I spent way too much gas money going to my P.O. box for this shirt, but it is cool. So, thanks to GetBlock for sending me a shirt. I'm compromised, boys. They sent me a free t-shirt. Good morning and welcome, everybody, to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life. Today, we're going to be talking a lot about Ethereum, of course, and the declining prices or revenue, of course, for mining. And that is primarily due to the fact that obviously it is kind of going away. Just basically between the bear market, the merge coming up and all of that, the pricing in crypto, it's not looking great. But there are some other options out there. You just have to be searching for them. And that is kind of what we're going to be doing through this bear market. That being said, we have quite a few more other topics to get into. We have Argentines moving into stable coins after their economy minister resigned, which is kind of the point of cryptocurrency. So obviously that's a big one in my opinion. 3 Arrows paper trail leads to trading desk obscured via offshore entities. We have Bitcoin catching a stabilizing tailwind. That is what WCCF Tech says. I tend to disagree, but they do have some information on the Celsius network, basically combating short sellers, which was interesting. NFTs are kind of dying off, if you guys haven't noticed. And one of the things that was really interesting is Chevy had released an NFT that basically didn't sell at all, no bids on it, and it even came with a free Corvette, which is what the heck. I missed it too. Probably poor marketing. Visa launches an exclusive no-limit Bitcoin card. And Coinbase says miners' sales of newly minted Bitcoins don't add any significant market pressure. All right, Coinbase. We have new information on the 7900 XT with more specifications. Kaspa is changing their programming language. And MinerStat releases a mining pool. Lots of fun stuff. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And bam, welcome back everybody. So as always, first things first, we get into miner releases for the day. And we have Gminer version 3.03 and one fix. It said they improved stability of the API server, fixed too many files open error. Not a huge change, unfortunately. So pretty much whatever miner you've been using over the past few days is probably good to go. I know SRB miner is one that now is added and updated into Hive OS. I hope to be covering that soon. You know, as far as Gminer, nothing here that I think is going to be impactful on anybody from a mining profitability or revenue standpoint. We also had a new mining pool, odd timing for this mining pool coming from MinerStat at pool.ms. They launched this pretty much over the weekend, and it is Ethereum and Ethereum Classic. And I guess the Ethereum Classic makes sense. A lot of companies have been doing this lately. You know, we had Luxor release an Ethereum pool, which was odd. And now we have MinerStat deciding to release an Ethereum pool, which is odd to say the least. The fee is quite high at 2% as well. It's PPLNS, so nothing revolutionary from there. The things that they're going to be kind of giving you here that are interesting is that if you use MinerStat for their OS or for the miner on Windows, you can get basically 100% of your fee back as MinerStat credits. I'm not sure exactly what MinerStat credits give you other than maybe allowing you to run rigs, right? So essentially, if you're not familiar, a lot of these operating systems, you have to pay a certain amount to utilize them, usually over a certain amount of rigs or whatever that may be. What my assumption here is that you will get all of your fee paid back, but then you'll take that fee as part of your MinerStat credits to pay for your rigs for utilizing the OS or the miner itself. The pool stats has 906 workers on it and 0.2 terahash a second. So not necessarily anything crazy as far as like increase in hash power on it. I mean, it's a pretty respectable amount of hash rate already for a new launch, but nothing too out of the ordinary or unexpected for a site that has so much traffic going to it. If you guys are interested, you're already utilizing MinerStat for the OS, maybe it's one you want to check out because you do get those fees back to pay, as best I can tell, for your rigs. I'll have to confirm all that, obviously, and go through it and get more information. That's where we are at right now. So a new miner, a new mining pool. And now we have new information as well on Kaspa. Now, Kaspa is a coin that I had been speculative mining early on before it was listed on any exchanges. And we have today an announcement or basically a community post by M. Sutton, one of the, of course, developers for Kaspa. And he's talking about moving the actual programming language over from Golang to Rust. So let's get into it. Let's hear what he has to say, and then we'll kind of chit chat about it. So in a community post on the 3rd of July, he said, "Hello, everyone in our community. I would like to share some of my thoughts regarding the next step of the Kaspa development effort. Some would call it a roadmap, but this is mostly my personal perspective and plans. So the TLDR is I have a few months now where I can theoretically work full-time on Kaspa, and I want to initiate an effort to rewrite Kaspa D in Rust in order to make it into a space code, quote unquote, system to reach maximal BPS and TPS, so transactions per second, through a high-performance, well-designed implementation. Likewise, he said that @someone235 can join this effort to some degree, and he believes others will follow. Here's the longer story. In order to reach physical throughput limits and higher block rates, we believe Kaspa needs to be rewritten in a performance-oriented programming language and with a performance-oriented mindset. The current code base carries on its back years of research and development efforts and uncertainty. Now that we have a stable and working real-world and world-scale network, it is time to put the pieces back together in the purest form. For being a world-leading financial system as Kaspa wishes to be, the code base should transform to the ultimate level of quality and performance. The main goals of such a rewrite, warning, this might become technical. So here you go. Number 1, higher efficiency and tighter performance. The Rust programming language has the right balance for writing a system like Kaspa or Kaspa-D, the daemon, essentially. Kaspa daemon. Anyways, so with low-level memory management on the one hand, contrary to the currently used Golang, which is garbage collection based, and high expressiveness on the other hand, async, await, etc. Not to mention the large and mature crypto Rust ecosystem. 2, max BPS and TPS. Giving the above some concrete numbers, I believe a goal of 32 BPS is definitely possible, and even 100 BPS is a reasonable target. With our current block size, this would translate to 6,400 to 20,000 transactions per second, but block size can also theoretically be increased to find a sustainable amount of transactions per second, where the only limiting factor becomes the internet connection itself. 3, simplified and modularized code base. Rewriting will make the code base more approachable for newcomers. My feeling is that the core of the current Kaspa-D code base is hard to figure out for newcomers and is a bit obfuscated. Up until now, all code contributors to Kaspa-D from non-core members are still in the external realms of the code base, such as the RPC API and related services. 4, incorporation of pending features. New features and upgrades can be taken into consideration without the overhead of making many changes to an existing code base. Examples include RPC API or API redesign, archival nodes, and possibly P2P support for a subnet of such. Header pruning, smart contract ground laying work, and more. 5, documentation. I think this one's actually a big one, but it's last. Throughout the rewrite process, we can define and follow a standard for high-level documentation of the various sub-protocols and algorithms in the system. This can make it possible to outsource the effort of completing the white paper to other members of the community, relieving the burden from us. I believe the vast majority of this task can be done in 4 to 6 months of full-time development. Obviously, such a heavy effort requires appropriate funding and well-defined milestones, as well as a community-appointed trust group, the Dev Fund Committee, excluding myself, to monitor the process. I called on the community to discuss this initiative and its value to find ways to compensate and encourage this effort, which I believe to be vital for Kaspa's long-term ambitions. So the TLDR is essentially going to be moving from Golang, like we talked about earlier, to Rust. From my perspective, I think Rust is superior from a programming language perspective. I also think that it is kind of ubiquitous, meaning like as far as like getting more developers outside, like volunteer work, all that sort of stuff, commits, help for the community themselves to build out. I think that moving this direction would be great. Some of the downsides, though, obviously, is time to develop, things going wrong. And from the miner perspective and wallet perspectives and exchange perspectives, you know, that can be a bumpy road where when you're doing a huge change like this, you end up, you know, having nodes go down, people not updating nodes, people never updating their nodes ever again, and losing, of course, some of your decentralization. These are the types of worrisome things that could happen with a change like this. In my humble opinion, I think that it should be done. Obviously, like I said, most important to me would be the documentation, because if you can get good documentation while you're putting all of this together, you have the opportunity for more people to come into the project and help out. And the more documentation, the better with any project, in my humble opinion. So that's kind of where I'm at there. Obviously, having more transactions per second is going to be better as well. So more transactions faster block times, all of that sort of stuff is relevant here as well. So that's kind of what's going on. You can check out their Discord and basically participate in the discussion surrounding this change. And I would encourage you to do so, especially if you have any knowledge or, programming knowledge or anything to offer to the team. That would be even extra beneficial. So that's Kaspa. That's the latest update from them. Let's get into WCCF Tech reporting on the 7900 XT RDNA 3 after I drink a sip of my coffee that I'm holding very close to my mouth. Bam! AMD Radeon RX 7900 XT graphics card based on the RDNA 3 Navi 31 GPU is going to be the next-gen flagship for the Red Team, ushering in performance levels never before seen in the PC gaming segment. And here's everything from specs, price, and performance that you need to know. The RX 6000 RDNA 2 graphics card proved that the Red Team can offer performance on par and even exceed that of the competing RTX lineup. Each segment saw a massive increase in performance, but the Navi 21 series was where the real action was, with performance higher than the RTX 3090 Ti across the board. AMD not just delivered a brand new GPU package to its gaming audience, but a package that was uplifted with a wide variety of architectural and software innovations such as Infinity Cache Tech, FSR, and Smart Access Memory. All of these features combine to give Radeon users a fluid and smooth gaming experience while enjoying all the benefits that modern day games have to offer, such as ray tracing, DirectX 12 Ultimate, and visual upscalers. We should expect similar things with the next generation flagship too, but an important factor to consider is that the GPUs are becoming more power hungry and more pricey. It is a trend that might continue into the future as we get better products, but in return, there's always a cost to pay for the end consumers. So starting with what we know so far, first we would like to take a look at the brand new RDNA 3 GPU core that is expected to debut in the next gen Radeon RX 7000 series graphics card lineup. At the top of the RDNA 3 SKU lineup is the Navi 31 GPU. Although there's an even faster chip in the works that is expected to debut next year, the 2022 flagship is said to be based on the Navi 31 GPU. The AMD RDNA 3 GPUs will be part of the GFX 11 family, and the flagship Navi 31 GPU is internally codenamed Plum Bonito, whereas the RDNA 2 flagship, the Navi 21 GPU, was internally known as the Sienna Cichlid. There we go. AMD has become quite fond of using fish names as its internal code names for the gaming GPU lineup, and that's expected to continue with the RDNA 3 lineup. AMD confirmed that its RDNA 3 GPUs will be coming later this year with a huge performance uplift. The company's senior vice president of engineering, Radeon Technologies Group, David Wang, said that the next-gen GPUs for RX 7000 series will offer over 50% performance per watt uplift versus the existing RDNA 2 GPUs. Some of the key features of the RDNA 3 GPUs highlighted by AMD will include a 5nm process node, advanced chiplet packaging, re-architected compute unit, optimized graphics pipeline, next-gen AMD Infinity Cache, and a greater than 50% performance per watt versus RDNA 2. In the information published by AMD, the company highlighted a few key features of its RDNA 3 GPUs that will power the next generation of Radeon RX graphics cards. The RDNA 3 GPU will be based on a 5nm process node and utilize an advanced chiplet packaging that delivers increased performance per watt. Furthermore, the GPU will house a range of new technologies such as a brand new and re-architected compute unit, an optimized graphics pipeline, and the next gen of Infinity Cache. AMD will be re-architecting the compute units with RDNA 3 to deliver enhanced ray tracing capabilities, although there's no mention of what these capabilities are. If we were to guess, we would say it's definitely talking about performance and a set of advanced features on the RDNA 3 GPU core for the RX 7000 series graphics card. AMD's RDNA 2 GPU-powered RX 6000 series were the first to feature ray tracing capabilities on the RedCamp. They were a generation behind NVIDIA, who introduced their first ray tracing GPUs 2 years prior on the Turing graphics architecture and fine-tuned it further to deliver better performance in the second generation on Ampere. With RDNA 3 GPU-powered RX 7000 series pitted for its launch later this year, we can expect AMD to offer a similar jump in performance or even exceed Ampere's ray tracing capabilities. But the real challenge ahead would be to rival NVIDIA's third-gen ray tracing cores, which are expected to debut on the Ada Lovelace-powered 40 series. Besides ray tracing, AMD will also be adding an optimized graphics pipeline for RDNA 3 GPUs, will allow for even higher clock speeds than RDNA 2 GPUs. The AMD RX 6000 cards already run close to 3 GHz, so with an improved 5 nanometer process node, we can expect AMD to breach past the 3 GHz clock limit. This is essential for AMD as their competitor isn't holding back either, with the 40 series rumors also hinting at up to 3 GHz clock speeds utilizing the more efficient 4 nanometer optimized 5 nanometer process node. In addition to these, AMD will be leveraging advanced GPU capabilities of its RDNA 3 graphics architecture to deliver a richer software ecosystem, such as support for AV1 and brand new WMMA instructions, which will allow AI learning through the assistance of dedicated hardware blocks. The company is expected to debut its next-gen FSR 3.0 technology with RDNA 3 GPUs, which will tackle NVIDIA's AI-assisted DLSS feature suite. The GPUs will also be amongst the first to utilize the brand new Gen 5 protocol, PCIe Gen 5 protocol, allowing for up to 128 gigabytes per second transfer rates. This will be a crucial step in enhancing the smart access memory. 1 second, guys. Boom. All right. Which is a brand new feature designed in compliance with Microsoft's Direct Storage API to deliver faster loading times and better texture streaming in-game. Display capabilities such as DisplayPort 2.0 and HDMI 2.0 will also be present on the new graphics card. So here we have some of the generational comparisons between Navi 10, 21, and 31. If we scroll down, we're really looking for the memory bus, and it looks like it's now getting reported as 256-bit. I was hoping for that 384-bit, and that is GDDR6. So if this is true and we've gotten that update, we are getting a downgrade in the memory bus width, which could be disappointing from a mining perspective. The Navi 31 GPU, the flagship RDNA 3 chip, would power the next-gen enthusiast cards, such as the Radeon 7900 XT graphics card. We have heard that AMD will drop compute units in favor of workgroup processors on its next-gen RDNA 3 GPUs. Each workgroup will house dual compute units, but with twice the SIMD32 clusters, as opposed to just 2 on each compute unit with RDNA 2. Rumors are that AMD has the option to select between Samsung and TSMC for the 6 nanometer die. According to the latest information, the Navi 31 GPU with RDNA 3 architecture is expected to offer a single GCD with 48 workgroup processors, 12 SAs, and 6 SEs. This will give out a total of 12,288 stream processors, which is lower than the previous count. This will also drop the overall compute performance unless AMD goes crazy with over 3 GHz clock frequencies on its flagship part, which I think we're expecting. The Navi 31 GPU will also carry 6 MCDs, which will feature 64 megabytes of infinity cache per die, and are also likely to carry 64-bit memory controllers that will provide the chip with a 384-bit bus interface. See, so there we're getting reports of the 384-bit bus again. As for clock speeds, the AMD Navi 31 GPU is said to offer clock speeds that can hit over 3 GHz. NVIDIA's flagship GPUs are also said to offer close to 2.8 GHz clock speeds, but AMD has had a clear advantage in clock speeds over NVIDIA during the past generation, so it's expected to continue. A 3 gigahertz clock speed means that we can expect over 75 teraflops of FP32 performance on the new flagship, which will be a 2.3 times increase over the current 6950 XT. Now, this is going to result in higher power draw, and AMD seems to have confirmed that that their next generation graphics card lineup will feature higher power consumption, but they will still be more efficient options than what NVIDIA has to offer. The AMD 6950 XT already has a total board power of 335 watts, so for a greater than 2 times performance gain, we can expect a final total board power for the rating on our X7900 XT to end up close to 400 to 450 watts. To cool such a thing, a really high-end cooler will be required. A while ago, Moore's Law is Dead shared what seems to be the first look at the high-end AMD Navi 31 and 32 GPUs with the MCM design and the respective RX 7000 series graphics card, which are seemingly going to feature high-end liquid cooling designs out of the box. The card renderer shows it's a dual 8-pin design with a dual slot design and a 120mm AIO cooling solution. Here you go. Dual 8-pin, so that's nice to see. Won't have to upgrade to, presumably, potentially not have to upgrade to ATX 3.0 and the Gen 5 connectors. Navi 31 MCDs will be linked to a single GCD via a next generation Infinity Fabric interconnect and feature 256 to 384 megabytes of Infinity cache. Considering the latest memory design, next generation Navi 31 GPUs can be equipped with 24 gigabytes of VRAM, the same memory capacity as the upcoming and existing flagship from the 3090 and 4090. The newer memory spec can be seen as a reduction over the previously rumored 32 gigabyte memory, but it's definitely going to help tone down the pricing of the card. As for performance of these monstrous GPUs, we can only use theoretical numbers here since the launch is a bit far away, but based on what we know from the expected theoretical compute numbers, the performance is going to see over 2.3 times gain over the existing cards. This is a major leap. Based on the theoretical clock speed of 3 gigahertz, you get up to 76 teraflops of compute performance, and the rumors are suggesting even higher boost clocks. But one should keep in mind that compute performance doesn't necessarily indicate the overall gaming performance, but despite that, it will be a huge upgrade for gaming PCs and a 6.2 times increase over the current fastest console, the Series X. This will be over 2 times the compute performance uplift for each graphics card versus its predecessor, and this is without even factoring in the brand new architectural features that are expected to bring major lifts to in their respective department. Now, flops aren't necessarily reflective of the graphics or gaming performance, but they do provide a metric that can be used for comparison. A 2 to 2.5 times gain over the 6900 XT and 6800 XT would be huge for AMD and is definitely going to be required if they are going to tackle the likes of NVIDIA's RTX 40 series. Gamers should expect fluid 4K gaming to be buttery smooth on these graphics cards, and with the Fidelity FX suite offering next-gen FSR, SAS, and SAM support, we might even see playable 60 FPS at 8K resolutions. Wow. The AMD 7000 series graphics cards will be focusing on the high-end variants first, with the likes of the Navi 31 and 32 and 33 GPUs. Previous rumors had mentioned 33 to be followed by Navi 31, then Navi 32 based GPU graphics cards, but the leaker had earlier pointed out that those plans were no longer applicable. We don't know which GPUs will hit the market first, but AMD is likely to unveil its Navi 33 and 31 variants first. As for the launch, the cards are either expected in late October or mid-November, which means a Q4 2022 launch. This would be similar time frame as the AMD Ryzen 7000 Zen 4 desktop CPUs, which will also be launching in fall of 2022. Furthermore, NVIDIA is aiming for a Q4 2022 launch, and that's not all. Even Intel is planning a Q4 2022 launch for its very own 13th gen Raptor Lake CPU family. So in total, we are looking at 4 major desktop PC launches later this fall, which means it's going to be one heated Q4 this time around, but consumers are in for a treat as they will have lots of tech to choose from for their next gen gaming PC builds. As for pricing, we will have seen AMD breaching past the $1,000 US figure for its current 6950 XT flagship, so that might be a hint at things to come. Realistically, AMD prices its flagship around $1,000 US mark, but it also comes with some major affordable options in the $600 to $800 US segment. The Navi 31 is currently only expected to include one graphics card, but if the company plans on doing a duo or trio launch like the previous flagship chips, then we can also expect a $699 US solution. So there is everything that we know so far about the RX 7000 series GPU lineup. I'm not clear on if we are getting a 384-bit bus or a 256-bit bus at this time. Maybe you guys can help me out in chat or down in the comment section below, and we'll get verification on that, obviously, as we get closer to the release times. For mining, we hope that we see a 384-bit bus for that memory performance, or if we could also see some sort of correlation between the Infinity Cache technology and mining or a particular algorithm, that would be awesome too. Moving on, Coinbase says miners' sales of newly minted Bitcoins don't add significant market pressure. If all newly issued Bitcoin were immediately sold onto the market each day, it would equate to only 900 Bitcoin of selling pressure, the report said. A common concern during cyclical downturns in Bitcoin mining is the extent to which miners are selling their Bitcoin holdings, crypto exchange Coinbase said in a research report last week. In times of market upheaval and falling Bitcoin price, margins compress across the board and force more miners to become net sellers, the note said. Given the price drop and the resulting loss of profitability, the financing environment for the mining industry has shifted materially since late last year, and raising capital in the public markets has become very difficult, Coinbase said. Still, even if all newly issued Bitcoin were immediately sold onto the market each day, that would equate to only 900 Bitcoin of selling pressure, which represents just 1 to 1.5% of total daily volume, it added. A healthier Bitcoin derivatives market should allow miners more options in terms of potential hedging strategies, the report added. Mining companies that expanded aggressively in recent years and leveraged their balance sheets in the process are now being forced to restructure their operations, the note said, adding that these conditions should present opportunities for consolidation across the mining industry in the second half of the year as less prudent miners continue to face challenges. While the mining market may still be far from an equilibrium hash rate, miner selling and shuttering for activities in recent months has resulted in a falling network hash rate and ultimately mining difficulty. And once these trends flatten, it could signal the start of a bottoming process based on similar trends observed in the 2018 crypto winter, the report said. So, what are we seeing? We are seeing that apparently, well, this kind of makes sense. Let's go into it, right? So when we talk about the cyclical nature of the halving, what we are talking about is the reduction of newly minted Bitcoin paid out for solving a block to a miner. And this number will significantly go down as, of course, the total volume of Bitcoin goes up. Meaning that essentially what you have is less selling pressure because the amount of Bitcoin that miners are making is a lot less compared to the disparity is much larger between the amount that's getting minted and the total volume in, of course, the markets. This means that over time, the actual influence of the halving will lessen. Theoretically, right? And that will also depend on how much demand there is for Bitcoin and other outside factors as such. Does that mean that we're completely out of a halving cycle? No, I think we're still going to see the halving cycle. I just don't think that we will see it to the extent that we would see it affect it previously, because you essentially had more newly minted Bitcoin being sold off by the miners during these times. So that's kind of the perspective surrounding it. And we'll just have to see how, that shapes out the next halving cycle for Bitcoin, which we will be able to see in 2024 to 2025 timeframe. Visa launches the exclusive no-limit Bitcoin card in UAE. This is coming from Finbold. As the cryptocurrency market expands, more corporations are starting to recognize the opportunities it offers and seek ways to incorporate digital assets in their operations. This is adoption, right? As well as offer crypto-related services for their customers. One of these corporations is Visa, the world's largest payments network, which launched an exclusive VIP crypto card called the Bitcoin Black in the United Arab Emirates, a press release stated on July 3rd. As per the press release, the card, which was first launched in 2021, is available by invite only to 10,000 members around the globe, and it allows them to convert their Bitcoin as well as other major cryptos into spendable cash. The invitation can be requested via the Bitcoin Black website. Reportedly, the card is secured by the holder's cryptocurrency and offers premium benefits such as no spend limit in any place in the world where Visa is accepted, as well as rewards of up to 10% in exclusive SPND tokens. As such, this exclusive card allows its owners to spend rewards on various luxury items in Bitcoin Black's white living luxury marketplace, a curated online boutique that includes luxury watches, purses, cars, charter jet deals, private mansion access, and more, and which is expected to be launched soon. Incorrect direction, my friends. I do not like this at all. First of all, it's centralization. It's centralization to the top 1%. It is only allowing the top 1% to participate, and I really don't like this at all, just in general, right? I mean, the idea of Bitcoin lately, like obviously with the bull runs, the price, everything is number go up. I'm in this to make money. That sort of attitude. The culture surrounding cryptocurrency is kind of disgusting in a lot of places. When you look at like the kind of flaunting people are doing in places like Bitcoin Miami conferences, etc., and their Lambos and stuff. I get a lot of it as memes. I do. I understand that. But I really don't like the culture surrounding it especially around the trading portion of it. And this kind of just exacerbates that. It proves that is what people are focused on, when really what we are trying to focus the attention on, or at least what I try to focus the attention on, is providing, individual sovereignty, financial freedom, and that sort of thing. So as far as this goes, this is a very restricted, centralized service that is only for basically the people that have already been manipulating the fiat system to their advantage and hurting the lower class or working class in general. So that's kind of how I feel about it. And it makes sense that it comes from Visa, right? So they did go on to say, quote, people with incredible wealth in crypto needed a way to spend their crypto easily and be rewarded for it. So do the regular people, like me and y'all, Bitcoin Black is perfectly suited for high net worth individuals who want to use their crypto for business or pleasure wherever they are in the world, including the 140 countries where Visa is accepted. As he said, the card is straightforward to use for anyone. All members need to do is simply load up their crypto through the web app or soon to come secure Bitcoin Black wallet app, and they're instantly empowered to spend their crypto with the best conversion rates and high limits. I mean, there are services like this that you can check out in multiple areas, obviously, like crypto.com has a card, as well as Coinbase. You can do this at a lower level. I think they're just going to get more advantages, especially with a processed transaction as large as Visa. But luxury items accessible via crypto isn't an entirely new concept, as brands are increasingly targeting millennials and their parents. As Finbold reported, some luxury watchmakers are now allowing customers to purchase their products using crypto, including high-end brand names like Tag Heuer, Hublot, and Breitling. There we go. I'll tell you guys, I don't know any of these companies, nor do I care. I'm sure there's some watch guys that are like, oh, but look, I just don't care. That's how I feel. So in more news too, a lot of these companies, it's funny. We see Visa popping in now. Everybody during the bull run was kind of super hot on crypto, right? And then all of their stuff that is surrounding crypto that they were planning on is coming out late during the bear market. It's kind of hilarious. And the most recent example that has turned into a failure is there have been no bids on Chevy's first NFT, even though it came with a free Corvette Z06. Chevy's first foray into non-fungible tokens was a non-fungible dud. The automaker netted 0 bids for its first NFT during an auction last month, even though the digital drawing came with a free 2023 Corvette Z06, according to the Corvette blogger. The NFT, which depicts a lime green Corvette Z06 blasting through a cyberpunk landscape, was created by artist Nick Sulo, who goes by XSulo online. The winning bidder would have also received a unique minted green Corvette Z06, which will be the only car painted in that color, and the option code RFN, which will forever associate the car with the NFT auction. And the Corvette's VIN number will be in binary because NFTs are digital and computers use binary to get it. I mean, that does look really cool going through that cyberpunk city. I'm not going to lie. I'll just go ahead and take this Corvette here. There we go. Right click, save as, done. But alas, there was no winner to ascribe to the blockchain because mighty Chevy struck out. The automaker was only accepting bids in Ethereum. Most NFTs are purchased using Ethereum, the price of which has been extremely volatile in the recent weeks. The cryptocurrency has dropped more than 64% since April 1st, while the most lauded NFTs have seen their floor price for the lowest one on the market, drop more than 70%. The auction was held from June 20th to June 24th. Super Rare, the NFT marketplace that oversaw the auction, tweeted on June 24th that it would reopen bids for 24 hours because some users missed the window. But apparently that didn't work. The auction closed yet again with 0 bids. Basically, they pulled a Morbius. Trevor Tompkins, a spokesperson for Chevy, shrugged off the disappointment in a statement to Corvette blogger saying, quote, "Our first step into Web3 has been educational, and we will continue to explore ways to leverage technology to benefit our customers," end quote, Tompkins said. Look, I don't classify NFTs as Web3. I just want to point that out. Of course, the real loser in this story isn't Chevy, which will no doubt move on from their experience a little older and a little wiser about the volatility of Web3. The real loser is Donors Choose, an education charity which was designed by Chevy as a beneficiary of the auction. This could serve as a warning to other automakers who are tempted to dip their toes into the NFT marketplace. Swim at your own risk. Here's the other thing about NFTs that we have to basically call out that I don't think like a lot of people want to acknowledge, and that's the first mover problem, especially in the NFT marketplace, but in crypto in general. Your first mover for programmable contracts, you got Ethereum. They're kind of the top dog. Then, secondary to that for the NFT marketplace, I'd never heard of Super Rare. I think if they really wanted to launch this and get, people that are interested in NFTs, interested in this NFT, you would want to launch on a marketplace that has that first mover advantage where everybody is browsing. And that would be something like OpenSea. Not to condone OpenSea, I'm just saying from a launch perspective for a large company like this to miss that very clear fact is pretty sad. Obviously Super Rare probably had some sort of deal with them and they were going to use it to build up their marketplace, but not a good idea. There is also other options, Rarible could have worked and the such, but also the type of people looking at Corvettes, if they're looking at... just kind of extrapolating here. I don't know. Just a couple ideas. They're probably older generations that more than likely are watching, traditional media who are very down on cryptocurrency right now, and for good reason because of the price, right? And if you are looking at going into, purchase an NFT at probably a pretty significant price point for the hopes of winning, essentially a special edition Corvette, you have to consider the fact that when you put that money in, if it's too volatile, that value of the ETH that you put in drops, and then you have to put even more in so that you can meet the price of the NFT for the auction. And you're kind of fighting a losing battle if the price continues to drop, and that's going to cause some fear surrounding it. Unfortunately, I think that this does carry through to the rest of the NFT marketplace and has been carrying through to the rest of the NFT marketplace, which is, of course, affecting Ethereum mining profitability, because a lot of the big days that we were getting from mining were coming from NFT launches and things like ApeCoin, Bored Ape Yacht Club, Mutant Ape Block Yacht Club. All these big NFT launches would happen, and it would drive the transaction number up, which would drive the fees up, which would then pay out to the miners. And that's part of the reason why, as the NFT marketplace kind of gets destroyed in, you know, your traditional markets and people aren't as interested in it, the mining profitability goes down. And it doesn't help that other things have been put into place like EIP 1559 that are burning part of the rewards as well. So unfortunately, we see network security already dropping with Ethereum as the hash rate starts to go down. And I think that will continue as more miners get priced out. We'll talk about it more, though, here in a second after we talk about Bitcoin catches at least one stabilizing tailwind as the Celsius network goes all out against short sellers. I really wanted to see how WCCF Tech is reporting on this, primarily because here's the thing. Everybody is worried about this resistance level. It's like Bitcoin over 20,000, Bitcoin under 20,000, Bitcoin over 20,000. And I think like when you're reporting, you need to be extremely careful because like this came out 4 hours ago and then we had huge market dumps, right? Like they're like, oh, well, you know, it looks like it's recovering. It's over 20,000. No, sir, we're back under 20,000. And I think like when you're writing about this crypto market, it's pretty clear that you're going to be sitting somewhere always between that like 19 or 8, let's say, to be fair, between that $18,000 and $22,000 level. It's somewhere in between there. And I would presume that it's going to continue to be somewhere around there for quite a bit of time unless something large happens. And that could swing it, of course, one way or the other. But for now, like if nothing changes, I think you're just going to sit between that $18,000 and $22,000 level. But they say some call it the deep breath before the final plunge. Others label it as crucial consolidation process before the resumption of its long-term upward trend. Either way, Bitcoin continues to vacillate around $20,000 price level, building anxiety among the bulls and the bears alike. Against this backdrop, the world's premier cryptocurrency has now been bolstered by at least one particularly potent tailwind. To wit, the Celsius network has managed to scrounge up sufficient financing to dramatically reduce the risk of default vice versa. Its vulnerable pool of wrapped Bitcoin on Ethereum held in a dedicated vault. As we explained in an earlier post, Celsius network shot to prominence a few weeks back when two of its derivative holdings, staked Ethereum and wrapped Bitcoin, were caught in the brutal crypto meltdown melee. Lido staked Ethereum is a decentralized finance variant of Ethereum that is issued against staked Ethereum coins and which is redeemable for Ethereum on a one-to-one basis, but only after the Ethereum to transition takes place following the merge event late in 2022 or early 2023. Except, no, you're wrong once again. Let's go ahead and go over this. We'll clarify again. Staked Ethereum will not be able to be traded one-to-one with Ethereum after the transition to proof of stake. It has been clear that withdrawals will not be enabled post-merge, and that will come later on. It will not be anywhere near 2022 or 2023, and will probably even less likely be anywhere near the merge even, right? We're talking 6 months to a year out from that, knowing Ethereum and the developer community and the way they like to control and manipulate the price of the crypto. They are definitely not incentivized to unlock staking as well, because it will significantly impact not only price, but the security of the network, as people that are staking are directly incentivized more by the price of the cryptocurrency than by the rewards they are receiving for providing security to the network. And that is because the actual staking rewards are so low that you are more incentivized to sell off if the price goes up. Let's continue. A few days back, staked Ethereum depegged from its theoretical parity with Ethereum. leading to chaos in the DeFi space owing to STE's status as a vital collateral to underwrite loans in the crypto sphere. As investors started selling large quantities of staked Ethereum for Ethereum, Celsius Network faced a liquidity crunch, especially as the market to purchase Ethereum coins using STETH was not nearly as large as the overall demand, prompting the crypto lending firm to halt all withdrawals. Of course, Celsius Network also remains on the proverbial tenterhooks for wrapped Bitcoin, an ERC20 token that is fully backed by Bitcoin and managed by the Wrapped Bitcoin Decentralized Autonomous Organization, DAO, and which grants its holders access to Ethereum ecosystem. To it, the crypto lending firms hold around 23,962 wrapped Bitcoin in a dedicated vault. Critically, if the price of Bitcoin were to plummet to a predefined threshold, the vault's contents would be liquidated in the margin call, leading to a windfall for a few actors. Bear in mind that individuals who flag positions vulnerable to a margin call usually stand to gain between 10 and 15% of the cut from any subsequent collateral sale. It is for this reason that some crypto whales were trying to pummel Bitcoin's price a few days back in an effort to trigger the margin call on Celsius Network's wrapped Bitcoin vault. This brings us to the crux of the matter. Over the past few days, Celsius Network has been frantically posting additional collateral and repaying a portion of its loan to prevent a margin call on its wrapped Bitcoin holdings. As a result, these efforts, the margin call threshold was reduced dramatically. For instance, when we last wrote on this topic, the margin call threshold stood at a Bitcoin price of $13,603. However, in the past few hours, Celsius paid $120 million towards its loan commitment, thereby reducing the margin call threshold on its wrapped Bitcoin holdings to a Bitcoin price of just $4,967. So what they're doing essentially is paying off enough of a loan to make sure that the margin call is lower. It does mean that some analysts are probably expecting Bitcoin to hit under $14,000. As is evident from the snippet above, the liquidation price for Celsius Network's wrapped Bitcoin holdings has now decreased substantially, virtually eliminating the threat of a margin call. Nonetheless, readers should note that Celsius' overall finances remain very shaky, leading to a material risk of default in the days and weeks ahead. It is for this reason that traders continue to maintain short bets against Celsius native token CEL, as evidenced by a negative funding rate on FTX exchange. We've talked about the CEL short squeeze as well. But for now, at least, this development bodes well for Bitcoin, which has been suffering as of late due to the souring of sentiment across the crypto sphere due to a cascade of liquidations and margin calls in the DeFi space, with Three Arrows Capital emerging as the largest casualty so far. As far as Bitcoin's near-term prospects are concerned, ARK Invest Yassin Elmendra, there we go, recently published a detailed Twitter thread showing that the world's premier cryptocurrency is now perched at a critical fulcrum. To wit, this guy likes to say to wit a lot. It's like me. I do that kind of stuff a lot too, but writing is weird. The Puel multiple, a metric that compares Bitcoin's daily miner revenue to a 3-year average, is now at a periodic low. We just talked about that. Moreover, net unrealized losses for Bitcoin holders just reached a 2-year low. And as we explained in a dedicated post on the weekend, we expect Bitcoin to take a significant leg lower when a recession materializes in the US. Amid this uncertainty, Bitcoin bulls would be better off giving up on the rest of 2022 and the first half of 2023 to concentrate on the second half of 2023, which is expected to benefit from the proximity to Bitcoin's next halving event. That being said, usually it's after the halving event that really spirals that. And that's not until I think April or sometime around that for 2024. And it's usually 6 to 8 months after. I'm really thinking 2025 as far as what you should be expecting for price recovery on Bitcoin. That doesn't mean that you stop accumulating now. So it's kind of weird that I guess he's just saying the bulls should give up. And that is the difference between people pushing the price up and pushing the price down and taking, shorts and all that on Bitcoin. Overall, though, I mean, it's kind of interesting that they were able to reduce their margin call so significantly on Bitcoin, but it didn't talk about reducing it on staked Ethereum, which I think is a bigger problem at the end of the day, because like I said, they're not going to be able to pull that Ethereum out to back that staked Ethereum or wrapped staked Ethereum. There we go. So I think that that's going to be a big problem. It continues, though. We have more information on Three Arrows, and the paper trail leads to trading desk obscured via offshore entities. As Three Arrows Capital collapsed under market pressure, its much lesser known trading desk, TPS Capital, remained active, sources say. But a complex ownership structure might frustrate creditors' efforts to collect. The collapse and now bankruptcy case of the once mighty crypto hedge fund Three Arrows Capital has roiled the digital asset industry and contributed to a record first half tumble in Bitcoin's price. Yet for investors and enforcers following the money trail, the arrows points to an obscure legal entity that has so far mostly remained out of the headlines, while still aggressively trading and possibly shielding some assets from recovery. While Three Arrows Capital used its tens of billions of dollars of assets under management to invest in new projects and take large market positions, it also operated an over-the-counter trading desk called Taiping Shan, TPS Capital. The entity was once described on LinkedIn as, quote, the official over-the-counter desk of Three Arrows Capital, end quote, according to a scraped version of the site by Google. But the language has since been changed, distancing the two firms, of course. TPS Capital continues to make trades, according to sources in the digital asset industry in Asia, even as its parent company faces liquidation in the British Virgin Islands and an investigation in Singapore. For those seeking restitution from Three Arrows Capital via a lawsuit, the legal separation may complicate efforts to obtain a payout. Named after Taiping Shan Mountain on the island of Hong Kong, TPS Capital is registered in Singapore but domiciled in the British Virgin Isles. The parent company is now facing a lawsuit, but according to corporate filings, TPS Capital has a different ownership structure and hidden directors. According to registration documents filed in Singapore, TPS Capital's ownership is split between BVI registered firm called Three Lucky Charms Limited, BVI registered TPS Research, and Cayman Islands registered Taiping Shan Limited. While BVI law holds that the directors of a company aren't public information, the name Three Lucky Charms rings like Three Arrows Capital, whose three principals are Su Zhu, Kyle Davies, and a third individual whose identity isn't clear. TPS Research, which owns 47.5% of TPS Capital's Singapore entity, also keeps its directors hidden from the public as allowed under BVI law. Cayman's registered Taiping Shan, which owns 5% of the Singapore entity TPS Capital, lists Paul Musprat, the managing director of West Bay Global Services, a corporate services provider, as one of its directors, alongside Stephen Sokol, another West Bay employee, and Yi Long Fung. There we go. Yi doesn't have much of a presence online. He is listed as a director of TPS Capital's Canadian registered entity, which operates by the same name, founded in February 2022, and provides an address in the Toronto suburb of Thornhill. For a fund that was touted to be managing billions of dollars, Three Arrows filings with the Singaporean government show a paltry income that would suggest management of significantly smaller amount. According to a return for the 2020 fiscal year end, Three Arrows Singapore reported it had $3.3 million in total assets and claimed a $1.15 million profit for the year. Some $6.33 million was paid out in dividends to Zhu and Davies. Three Arrows 2021 year-end filing is not available. Three Arrows Singapore and Three Arrows BVI units split the purchase of Three Arrows December 2020. Position in Grayscale Bitcoin Trust, according to Securities and Exchange Commission filings. The Singapore entity was licensed to manage $250 million, which is $179 million US dollars, according to the Monetary Authority of Singapore. A Singapore-based person involved in the institutional digital assets industry who spoke to CoinDesk on the condition of anonymity said TPS held and traded most of Three Arrows Treasury. Another person in the similar position, that an Asian-based institutional crypto firm, also speaking with CoinDesk on the condition of anonymity, said that TPS is where the action was for Three Arrows. Earlier this week, the Monetary Authority of Singapore censured Three Arrows for misreporting information about the size of its holdings and issued a reprimand. The reprimand relates to contraventions by Three Arrows Capital, which occurred prior to its notification to Mass in April of 2022. Mass has been investigating these contraventions since June 2021, Mass wrote. Three Arrows provided misleading information according to the regulator. Mass also wrote, in the light of recent developments which call into question the solvency of the fund managed by Three Arrows Capital, Mass is assessing if there was further breaches. But while Three Arrows has filed bankruptcy in New York, TPS continues to use capital to trade, the People with Information said. The question is, can regulators or plaintiffs in the suit pierce the corporate veil between the two firms? Yeah, so what did we learn? Anytime you get these large, look, here's what we're learning in the bear market. Like, large corporations and governments interfering with cryptocurrency ends poorly. That's it. That's it. But we have more adoption. So we talked about adoption earlier with the Visa Black Card, obviously allowing really rich people to participate in crypto at a level that other normal people cannot, at least interact with traditional fiat systems at a level where other people cannot. This is a little different. If you're a SHIB holder, the people's token, you can now pay for Uber Eats. So Shiba Inu holders can now use the crypto to pay for Uber Eats. Uber Eats does not accept direct crypto payments at the moment. Uber Eats, the online food delivering platform, joins the bandwagon as it starts accepting the dog-themed altcoin Shiba Inu as a form of payment after launching nationwide delivery in the US. Acceptance of Shiba Inu as payment continues to grow, with Uber Eats as the latest company to embrace the popular altcoin. SHIB holders can now pay for their food orders using the dog-themed crypto asset through BitPay, according to the Bitcoin payment service provider's announcement on Twitter over the weekend. At the moment, Uber Eats does not accept direct crypto payments, but the payment service provider offers several alternatives that allow crypto holders to use SHIB, also other ones because it's BitPay, like Bitcoin, for example. This includes using BitPay gift cards, BitPay cards, and MenuFi. BitPay described prepaid gift cards as fast and easy ways for users to convert their crypto into prepaid gift cards that allow them to spend it just like cash at a wide list of merchants across a variety of categories. Another way of paying for Uber Eats using crypto is by purchasing gift cards for restaurants that accept cryptocurrency, or just having a crypto.com credit card and putting the credit card number in, but you know, is what it is. But perhaps the most convenient way to use the BitPay card, since it enables users to spend their crypto anywhere that MasterCard is accepted. According to BitPay, the card allows users to pay in Shiba Inu and other accepted cryptocurrencies to DoorDash, Uber Eats, Grubhub, and any other with food delivery service, including food deliveries from local restaurants with their own delivery service. BitPay also collaborated with the restaurant online ordering system MenuFi to make it easy for users to pay for deliveries and takeout to local restaurants and other fast food chains directly from their crypto wallet. That's what we want to see, direct from the crypto wallet, right? The latest announcement came at the heels of Uber Eats launching a nationwide delivery all over the US. We're committed to being a platform that allows consumers to get anything and finding new and diverse ways to help merchants grow their business, an Uber spokesperson said in a recent interview. SHIB is one of the casualties of the latest crypto meltdown, but unlike other crypto assets, it did not wallow during the tumble, but immediately bounced back. And they say as of now, it was trading at 0.73% at this number with a 24-hour volume of 210,944,320 based on the latest data from Coin Market Cap. Anyways, some sort of adoption. It's kind of weird how like some of these adoption things are like, well, you could kind of already do that already. BitPay kind of made it easy. Direct payment from the wallet is obviously going to be easier. But not your keys, not your crypto. Don't store a majority of your crypto in services like that. And now's probably not the time to be buying Uber Eats with cryptocurrency either. Just saying, probably don't want to be doing that. Now, in good news, we have cryptocurrency kind of servicing the original purpose, which is preventing, the misappropriation of fiat currency by governments, affecting the working class or the everyday man. And it's really interesting. So Argentines take refuge in stablecoins after the economy minister resignation. Obviously, across the world right now, we're having huge economic strife, and Argentina is one of them now at this point. And let's get into the article. Major crypto exchanges reported that consumers purchased up to 3 times as many stablecoins over the weekend as they usually do amid a brewing economic crisis. Now, when we talk about the inception of Bitcoin and cryptocurrency in general, we talk about its kind of catalyst being the 2008 housing crisis and that recession in the US. And basically, excuse me, let me get something to drink. It's hard to talk for this long. So, and basically the idea that it would be a hedge against inflation, it would protect people from economic crisis. And to a certain extent, a lot of what's been happening recently is people are kind of assuming that the downturn of cryptocurrency is directly tied to the downturn of the economy, and we are seeing Bitcoin follow traditional markets. The only kind of argument I have against that that's kind of interesting is it's still following its traditional cycle. So depending on if it goes lower, then we could say, it's affected directly by inflation. I'd be very careful, obviously, with investments and so on, but it's interesting to look at this. It may be that cryptocurrency doesn't really start acting as this kind of hedge against economic crisis until it's a full-on crisis. In the case of something like Argentina right now, or in the case of Venezuela and Digibyte, like we saw not too long ago during the last bull run. Following the resignation Saturday of Argentina's economy minister Martin Guzman amid an economic crisis, Argentines purchased between 2 and 3 times as many stablecoins as they do on a typical weekend, crypto companies in the country told CoinDesk. 3 major crypto exchanges said that the consumers were looking to hedge against a potential devaluation of the Argentine peso, ARS, whose buying power has plummeted over the past years as inflation skyrockets. Following Guzman's resignation, the peso depreciated about 15% against the stablecoins DAI and Tether on several leading local exchange platforms. Both stablecoins rose from ARS 245 on Friday to ARS 280 over the weekend. Following the appointment of Silvina Batakis to replace Guzman as the new Minister of Economy late Sunday, Tether quotations on Argentine exchanges rose to ARS 303 per coin. Quote, whenever there's one of these news stories in Argentina because of the 24/7 nature of crypto, it is the first market where Argentina starts to look for a price for the US dollar. This drives volumes up. Sebastian Serrano, CEO of the Argentina-based crypto exchange Ripio, told CoinDesk. Guzman's resignation is part of the latest fallout from the fight between Argentine President Alberto Fernandez and the Vice President Cristina Fernandez de Kirchner over the economic direction of the country, which saw inflation in May spike 60% year over year. In addition, Argentina's central bank is running out of foreign currency reserves, which is hindering imports, among other consequences. Argentine exchange Buenbit recorded a 300% increase in trading on Sunday compared to the same day in previous weeks, the company told CoinDesk. adding that many people use their DAI as collateral to obtain loans in Argentine pesos and purchase more DAI as protection against a potential peso devaluation. Various local media reports did not rule out the possibility that the government might announce a foreign exchange holiday on Monday to calm markets. Due to the lack of price references for the US dollar over the weekend, most Argentine exchanges increased the spreads between bid and ask prices to 18%, when in general they are around 2%. Pablo Sabatella, founder of the crypto education platform DeFi Education, which focuses on Latin America, tweeted on Sunday that exchanges added a giant spread to the people so that people don't trade, and the exchanges hedge against tomorrow's opening price. Due to demand and without a reference replacement price, prices rose and spreads widened, tweeted Andre Wise, head of trading and strategy at the Argentina-based crypto exchange Lemon Cash, adding that after Guzman's resignation, demand for crypto dollars was strong. So what are we seeing here? We're seeing kind of an interesting play, which is because cryptocurrency is 24/7 and the trading is available to the public is actually going in and using it to purchase not cryptocurrency, not Bitcoin to hedge against it, but the US dollar to hedge against the Argentina peso. So it's kind of a weird case here, because what we would have to assume then, if we wanted to see cryptocurrency actually move away from traditional markets, right, is you would want to see Argentines, there we go, move into Bitcoin, not into stable coins. At the end of the day, until the US dollar crashes, I don't think you see that actually happen. So I think an economic crisis that affects the US dollar is when we would see whether or not Bitcoin is set up in a position to basically handle its original purpose, which is that hedge against inflation, etc. And that may come in 2023 with the recession, etc. So once again, what you're seeing is the ability of cryptocurrency and blockchain to allow people to get out of economic crisis when their government is messing up. But they're doing it in a way that is still tied to a traditional fiat system in the US dollar. But as far as the technology works, it's kind of doing what it's supposed to be doing. So it's really interesting, right? There are still ways, obviously, they're trying to manipulate it and so on. Let's get into mining profitability, though, after a word from the sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, so welcome back, everybody. So I've been mining a mix of Ethereum and Ergo, and both of the numbers are really bad. And that's even including, of course, we have some donation hash rate coming on from Lip. So Papa Lip, thank you for the donation hash rate. It does make this a little bit difficult for you guys to really see. He only put it on though at like 7 a.m. So it hasn't been running for an extended period of time. But what we do see is our payouts being around like 0.04 to 0.05 per day, which is not a ton, right? So if we look at like the actual US dollar value, we had a day for $43. Let's see. So we've been doing it since the 1st, right? Is it the 1st? Well, it's technically since the 30th. But since the 1st, we're doing anywhere between $30 and $60 a day on about 3 gigahash. Now, I have a couple rigs, it looks like went offline, so I'll go get those online. Papa Lip's rigs are making up for it right now. I'm redoing a lot of rigs too, so it's just part of the nature. kind of slammed with time, unfortunately, lately. But then we're also still mining Neta with about 3 rigs at 4 gigahash a second. And my 3090s are over here just because they like it. And we're doing about another 5,500 Neta a day. And that really only translates to another $24 a day, somewhere around there. So $25 a day plus probably like an average of $50 a day. It's only $75 a day. That's probably not going to cover me, to be completely honest. And I got my reports coming out for this month, which was much worse than, or for last month, for June, which was much worse than what this month is looking like. And you'll see that once we get that video going. I have just not gotten to getting all the numbers in for you guys yet. So monthly, we're trying to track, profitability, show you guys what the farm's winning and losing, how much money it's making or not making. And we'll get to all that. But the daily profitability, right now was the $24 plus essentially $33. So it was $57. It's not shit. It's not shit. It is what it is. It's not going to pay bills at all. It's not going to pay anything. Hopefully, I can recover a little bit here and get some more hash rate online, because the rent's killing me out there, pretty much is what it's going to come down to. It's clearing the power bill, but we got to clear that rent bill. So we got to get it going. I got to get more rigs online. There's a lot of work. There's just, every time I go out there, I get like a little bit done, and then I feel like I just create a whole bunch more problems too right now. That's I'm feeling a little defeated. I know a lot of y'all are too. We'll just keep it rolling though. Keep calm mind on. Let's talk about profitability though. We have it adjusted here on the 3090 for ZIL hash to 110, Capal to 60, ProgPal to 60, and Firo to 60. That puts Ravencoin in the lead at $2.04 a day of revenue and $1.25 a day after power at 10 cents a kilowatt hour. Ethereum coming in second at $1.97 a day in revenue, at $1.21 a day after power. It's definitely better than it was before we had kind of the reset, but it's still extremely low. As you bump these power costs up, I think 15 cents a kilowatt hour is the national average. That really puts you down even lower to like 82 cents a day after power. So there's that. Zano at $1.92 a day in revenue, $1.13 a day after power. Sarah, $1.91 a day in revenue, and $1.12 a day after power. We have Equilibria at $1.77 a day in revenue, $1.14 a day after power. Conflex, $1.76 a day in revenue, and 97 cents a day after power. Firo, $1.59 a day in revenue, and 84 cents a day after power. And then Ethereum Classic all the way down here at 62 cents a day after power, $1.39 in revenue. And then Flux at 58 cents and Ergo at 62 cents a day after power, 10 cents a kilowatt hour. So that's pretty much kind of what we're looking at. Let's look and see if we've had any significant changes in the hash rate. We are down about 3 exahash a second, it looks like, on Bitcoin. Let's look at Ethereum. I believe Ethereum I already actually had pulled up here. It's at 893 terahash a second. I was expecting it to be around this, like the 900 terahash a second. So I don't presume that we're going to see more hash rate come onto the network right now, but I could be wrong. We'll have to wait and see. Ethereum Classic, 23 terahash a second, down about 1 terahash a second. Ravencoin, we are at 2.24 terahash a second. Flux, we are at 1.18 mega solutions a second. That's actually down quite a bit from last week when it was at 1.3. And then Ergo is keeping that difficulty down right now. It's at 11.6 terahash a second. All right. Mining pool profitability for the past 90 days. Crazy pool in first, Ether mine in second, F2 pool in third. For the last 60 days, ZET in first, Crazy Pool in second, Ethermine in third. For the last 30 days, ZET in first, Crazy Pool in second, and Ethermine in third. For the last 21 days, ZET in first, Crazy Pool in second, Crux Pool in third. For the last 14 days, Crazy Pool in first, Mining Pool Hub in second, F2 Pool in third. For the last 7 days, Crazy Pool in first, F2 Pool in second, Hive On in third. For the last 3 days, Crazy Pool in first, F2 Pool in second, Crux Pool in third. For the last day, Crazy Pool in first, F2 Pool in second, 2 miners in third. I did want to mention that Pulsar was mentioned by Rabid Mining today as being profitable. If you want to go check out his video, shout out to Rabid Mining, and I'll post that down here in the links for you guys to check out. And ASIC mining profitability. Let's get into that on MinerStat. We have the L7 at $20 a day as expected. The KD6 has dropped even further though at $15.14 a day. And that does mean that the KD5 is probably, wow, KD5 is now under $10 a day. Handshake Miner HS3 is actually beating it $10.33 a day. If we scroll down to the S19 Pro, it's at $3.21 a day. Make sure you check out, of course, the new firmware for those from Hive On. And the sale is now over at BT Miners. I hope you guys maybe found a couple good deals. There are still some deals going on, right? So we have some sales. The M30S has actually come down a lot, which is from What's Miner. That's their latest one. My understanding is these are tanks, meaning that they run for a very long time. So that's kind of their advantage. It's at 4,900. You can still get the same hash rate off of and probably more with firmware off of the S19 Pro though, which is at 4,650 plus the firmware might be worth it. We have the V1 Mini down to $669. You have the Gold Shell KD box at $1,477. And then the S19 95 terahash at $3,500. ASIC miners are just dropping in price significantly. Pretty cool. I don't think that this is really the Ethereum miners great. Let's get into questions and answers. Remember, super chats never required, always appreciated. First to be answered because they're the easiest to read. If you would like to boost the algorithm, super chat stickers do that the best, so I appreciate those. If you want to make sure the most support you give monetarily goes to me and the channel and, growing it, make sure you check out sonofatech.locals.com. And then if you want to ask a question and me to actually be able to see it, do at sonofatech and it will turn the message orange and I can read it easier. We got Scott Wilson that said, at Sonofatech, switch to my 2 PCs to mine Ravencoin with unminable pools, supposed to get payout in Bitcoin when I reach 0.001. Thoughts? I mean, all you're doing with unminable is mining the most profitable according to unminable. And then obviously that could be Ravencoin or whatever algorithm. And then they just do the swap for you. If that's what you prefer, that's what you prefer. It's up to you, man. Like, unminable's interesting. It's not something that I dive into very much. Like those services, I think it's the best service. It's better than like NiceHash, right? But you can also just mine the most profitable and then swap yourself. Obviously that you got fees and stuff to take care of. So a lot of that's going to be, figuring it out what works best for you and your geographical location, etc. Dragon Audio says, at Sonofatech, we're a small community who think that way. There you go. I don't remember what that's in reference to. Black Cat Crypto says, at Sonofatech, the price tends to go down around 10 a.m. Eastern. Well, maybe you can arbitrage it. I don't know. Do something. Carson says, at Sonofatech, hit me up if you want some more info on Argentina. I went on my honeymoon not too long ago, and it has to do with their central bank in dollars, not their peso. Well, that's what it said in the beginning, right? The price is going down because of the central bank. When people says, at Sonofatech, Argentina is in a bad place. About 10 million people, 20% of the population live off welfare. I wasn't aware of that much off welfare. That's pretty crazy. Detroit Irish is asking how the thermal pads went. They're not. I have not made it to the farm. I am... I'm trying to be a dad and just keep even YouTube alive right now. That's pretty much it. The farm requires entire days and I do not have entire days right now. So I don't know. I haven't even gotten out there. I have like rigs that are I just went and turned off rigs. That's all I did. That's pretty much where I'm at, where I just have to shut off rigs because I don't have any time. I have a little bit of frustration surrounding that subject because I need to put a lot of work in, a lot of time out there. Gabe says, ask Simatech, you know of any crypto credit cards actually in the wild that don't require KYC? There was one, but they got shut down. It was the Edge card. Hopefully they come back, but not currently, no. And he says, I want to buy upgrades for my rigs directly with crypto if I can save on fees, but also KYC equals lame. If you want to buy cards, I think you can, well, it's still BitPay though, which I think has KYC to an extent. No, you can do BitPay without KYC. Newegg. So you just buy through Newegg, dude. Hugo Home says, ask Simatech, if you had to bet on when the merge will be, what quarter or year would you put it in? I don't know. Like, I'm going to just take what they tell me, which would be September. Also, I just don't think it matters. Like, I think it's going to slowly die. Like, I just think like the mining's already dying for Ethereum, and it might work out perfectly to where it's just dead. It doesn't matter anymore, and all the GPU miners are already moved off by then. We had huge dip-offs, right? Like, hundreds of terahash just drop off already. Aggregator Visual says, ask Simatech, would it make sense to be able to use profit swapping for the Neta smart pool getting paid out indirectly in Erg? What do you mean? Dragon Audio says, ask Simatech, are you stuck in a lease on your facility? Yeah, I have 2 more years on the lease. A little less than 2 years. Ask Nawful says, ask Simatech, how long do you think this bear market is going to last? Until 2025. Trevor Collins says, ask Simatech, are you buying cards? What dollar per megahash are you looking at? I'm not buying cards. I have to buy and fix the cards I got. I got like 50 of them offline right now. It's really hard to keep up with just maintenance in the summer right now. I just kind of want the summer to be over. I just want the summer to be over so I can take a little bit of a breather on keeping the farm up. 3Mil says, can't you just hire a dude to help at the farm? I don't have any money to hire a dude. No, I don't have money for that. Like what? We lost like 150% of our net worth in like the matter of a couple months. Pragma says, ask Simatech, do you think Ethereum will leave the top two in market cap? That's an interesting question. We did read an article. So I was trying to remember this article. We read an article not too long ago that basically says like between Bitcoin and Ethereum, they make up a majority of the proof of work volume, and Ethereum moving proof of stake. The theory is that all the other big coins are proof of stake, and it would remove so much liquidity from proof of work coins that it would actually drive the price of all proof of stake coins down. Now, it's an interesting theory. I can't remember what episode it was, but I know it's clipped. Maybe I can go dig through and try to find that clip and tweet it out later or post it on the locals page or both. Let me go find that clip for you guys. I thought it was a really interesting article and it is covered. And once again, the idea is that your total liquidity or your total volume of proof of work coins is primarily made up of Bitcoin and Ethereum, and everything else is proof of stake. So when Ethereum moves to proof of stake, it just increases the amount of liquidity or whatever, the total volume of proof of stake currencies in the exchanges, meaning it devalues all of the proof of stake and increases the value of proof of work. Jay Dorsey says, ask Simatech, what coin are you supporting going forward with the merge? I'm doing Ergo. Aggregator Visual says, ask Simatech, having Guap swapping the Neta payout directly. Yeah, okay. So you're saying do Guap swap? Well, why would you do that? Because then you don't get the 15% bonus. Or is there a way to use Guap swap to convert? Or are you saying that there's a way to use Guap swap to convert the Neta automatically back to Ergo after it mines? Because that would be interesting. Leonardo Mohammed says, ask Simatech, ALF difficulty is spiking. I mean, I think there was a lot of people looking to dual mine at this time. VR Rider turns off his miners in Texas. Yeah, I don't have any AC at my farm, so I don't have to worry about AC. Should you buy... Oh, thanks for the super chat sticker, Forever Metalhead, helping boost the algo. Should you buy, says Outside Tech, which pool reward scheme do you consider good? PPS, PPS Plus, PPLNS, or PPLNS? It depends on what you're trying to get, right? So obviously, like I skip, you can pretty much assume that like PPS Plus is better than PPS, right? Because PPS Plus gives you some of the benefits of PPLNS, but the steady income of PPS. Okay. So you would want to be PPS Plus if you're going to do PPS, just in general. Because that's like paper share plus, and that plus stands for basically like getting the additional rewards that you kind of get with PPLNS. PPLNS is going to basically pay per last end share. And what that was primarily developed for was to stop pool hopping. So it's the most strict, meaning like you have to mine on that pool the longest out of all the pools. It does offer the most amount of increased or potential increase based on the amount of fees that you're getting from like Ethereum. So if you're mining Ethereum, then obviously like it's going to affect it a lot more, depending on how much network use is going on there. In a time like now, like PPS Plus is probably what I would lean towards. Obviously I'm on Crazy Pool, which was DPPLNS, and that was developed by Crazy Pool, I believe. And I'm trying to remember what the difference was. We covered this when they first launched it. Let me see if I can find it. Man, I'm probably going to have to go find... It's dynamic, right? But I don't remember... Okay, that makes sense. So it dynamically changes based on the chain difficulty, which technically I think everything does, but okay, so that's changing the amount of shares. Okay, so it changes the amount of shares based on the difficulty of the network. But I don't know how that translates into profitability or revenue. I am very clear on what PPS, PPS Plus, and PPLNS translate into on profitability, right? Like if there's a big minting, you would want to be on PPLNS. Paul, thanks for the $3 super sticker, helping keep that algo running. I think he said also at Son of a Tech, summer camp changing the thermal pads and s'mores. Yeah, it's rough. I got to get out there. I got some, because I wanted to do a video. So I got some NAB cooling, or NB, which Tech Shinji did a review on. They said he had the criticals. I didn't see him in there, but we also have the criticals too. Rad CPU man says, ask Son of a Tech, do you know where I can find the status of the second phase of the NETA bonus pool? How much is left basically? Off the top of my head, no. People usually just tell me. I'll be honest. Usually somebody's like, there's this much left. We would have to check the smart contract, and I don't know the new smart contract, or if it got loaded into the old one. I can ask, because we can start covering that. I can ask Rob, where can we see the amount of NETA? Bam, done. I asked. Thanks for the 19. What is that symbol? Super chat sticker. Mining Bay. helping boost the algorithm. Do we have any more questions today? Because I am itching to get to the farm and get work done that I can get done before 3 o'clock. I have meetings at 3. And I still have to go fill out a bunch of invoices too today. It's like the first today, even though it's not the first. You know what I mean? Alex says, SM Tech, just read it about 5 cards with the critical pads. Not sure about longevity. However, they save a ton of time since the pads are pre-cut and pre-measured. I don't think mine were pre-cut. I have to actually answer a bunch of emails today too. And then I actually have meeting conflicts today as well. I just realized. I really wish my calendar would sync up faster. Problem is my family calendar is not syncing with my other calendar. Ron says, can you do a video on how to set up R mode in Team Red Miner on Hive OS? No, because I can't get it working reliably. So, probably not. The kids come to the farm with me, Rad. I got somebody at the door too, so I'm going to go ahead and go. Summer's fun. It's fun, fun, fun. Hit the like, comment, subscribe, and notification bell down below, and I'll see you guys next Tuesday. I use calipers, Kevin Smith. Check out my video on replacing thermal pads on any GPU, and that'll cover it. I'll see you guys next Tuesday.